Well, we are on the air. Charlie's
Well done.
tired.
I am. I am. This market is
is,
just really,
is it
it's just
killing you?
exhausting.
Is
It
it
exhausts
exhausting you? Oh, wow. So,
you.
for those of you at home who want to know where we're at, what's going on, it is, 7 o'clock West Coast time, 10 o'clock East Coast time, on February 26, 2026. So, 226 2026. It's
Is that a code
Thursday.
for something?
And it's a
So
code
yeah,
for
we got to protect the
numbers.
palindrome.
I haven't finished my coffee, so lots going on. I know Charlie's exhausted by this market, so I'm going to come back later and talk a little bit about what we've been investing in, since I know a lot of people are like, gosh, what do we do right now? But maybe before we go to bakes, Charlie, why do you think this market's exhausting? So in case this is going to align with how other people think.
Because the rotations are violent. I mean, if you look at the software stocks like CrowdStrike and Snowflake, and I mean they're up big today after having sold off dramatically. Nvidia is selling off on good news. I mean, it's really a
Don't
trader's
don't don't
game.
take my don't take my stuff, please.
Yeah,
I claim
It's
that.
a
yeah,
trader.
he claimed it in the chat. Go for it, Charlie. What else?
It's a trader's game, and I'm quite honestly, I think it all ends badly this spring, and I've been trying to put on more and more shorts, particularly in the financial sector. But you have to be careful because short term the news is good. I mean,
Yeah.
J.P. Morgan had their investor day on Monday night, um, and provided some updates, and it was very upbeat. The one short term guidance they gave was on capital markets, and they said that investment banking would be up mid to high teens year over year, and trading would be up mid teens. The investment banking guidance was anticipated. The trading guidance was a little stronger than expected,
Hmm.
but and this is where I
Yeah.
think people may get into trouble. Um,
Yeah.
it reflected more of a beat on net interest income, which means JP Morgan is funding their counterparties that are playing in this, exuberant capital market cycle. It's
Uh-huh.
not so much on the agency side in terms of fees and commissions. And so, net, I think the fees and commissions are going to be disappointing, whereas the NII will be, better than expected. So if anyone's thinking that trading is robust, I think they're going to be disappointed when the numbers get reported in April. But
But
and then
will
at
they
the
be
same
happy enough with NII?
yeah, but that means you're taking on greater counterparty risk. And so this market gets even more volatile. We start having hung loans, which I think we're going to get. IPOs
Hmm.
start getting canceled, which you're seeing some of. Come April, I think there's going to be a very different attitude about the outlook. And this is the difficult part. I've been saying for a while that I thought 2026 would be a peak in capital markets revenues. And so the question becomes, what do you pay for peak revenues? And that's going to differ for a value player like me versus a momentum player like you, Nadine.
No, no, I'm not a momentum. I have both sides of the coin in my portfolios. I have things that I've owned since like 2000, 2010, 2011. So things that I think can compound, I hold. But we can talk a little bit about how the industry has changed, and maybe timetables have compressed a little bit, especially in this kind of shifting market. I'm happy to do that, but don't want to be
Yeah.
miscategorized.
And then you're looking at another group like home builders, which I think last time we
Mm.
were on together, I was going through the data, which was not very encouraging, but acknowledged that the home builders had a bid, and I was wondering if it was a bid because there was expectations that the State of the Union address would have something new and fanciful in it, and it didn't.
Right.
And so they got crushed yesterday, being off five,
Yeah.
6%.
Yeah.
So I don't, it's a tough market because I think we're in transition from a bull to bear market. That's what I think. But
Okay.
Well, one of my commandments is, thou shalt not rely on a politician or government action to make money in
true,
stocks.
so to speak.
But
I mean,
I
I've touched
mean,
that
let's
rail
talk
too many
about that
times.
compression though. So away from the home builders. So um it's not AI only, but it's been passive, it's been quantitative trading, computers doing it, the ability to use technology to get data to ship things very fast. It can change how fast capital flows into themes. If you want to call themes home builders, you could call themes AI and then not AI or utilities or whatever it is, defense. And so, one of the trends that I've noticed is that what used to be able to build over quarters. Like you could ride your theme for a while, right? Sometimes prices in weeks. And so, um, you just look at South Korea, memory, semis, agents, like options skew in the IGV suggests fatigue, even if like an RSI hits historically extreme oversold levels. So, you can have conviction without time frame recalibration, and that becomes stubbornness. Meaning, like, what does that mean to people is that you can believe in your thesis, right? But if it's priced fast, you got to get a new thesis. Like, you got to reposition because those themes are pricing faster, and I think fatigue can set in sooner. So long term now, like, because you called me Momo, like the issue is that long term or intermediate term could be 2 months versus what used to be 2 to 3 years. And I think that your risk framework has to evolve. So you can have a lot of conviction, but without recalibration, I don't love that, right? And options markets kind of whisper when momentum gets tired. Um, that's all I'm saying here.
Yeah.
So
You know,
you know what I mean? So you got
Nadine,
to be careful labeling because I don't think what used to happen 10 years ago is the same right now.
yeah, and I would add to it, I'll use the word manipulation, but it's not manipulation. It's influence or
Yes.
tape painting. But back in the '80s when I started off, there was something called the married put that some of the big, very aggressive traders used to paint the tape, and it was very successful. I watched it, in real time at times when I was
Yeah.
talking with some of these guys, and they say, look what we're about to do, and they would do it, and the tape would go one way, and it would just gain momentum because of their influence. And I think a lot of that is going on, from the big market makers today, and it's influencing opinion about fundamentals where there is no fundamental reality to what's going on, and that's also what's making it very difficult right now to stay with a conviction, is because you can get a pretty quick fast drawdown on your position
Sure.
from these married put type trading schemes.
Right, yeah, it
um,
goes the opposite way. You can make money fast, but you can lose money fast, and then what do you do? Right? Because also if the machine is against you or if a big player is against you, you can feel more and more pain as others pile onto that trade. So I would say that your capital obviously has to match your strategy. That's number one, because if you can't survive, doesn't matter what your thesis is, right?
right.
That's obviously really, really important. But for the person where it is aligned, then I think you have to have a lot more data and tools at your disposal to say, well, how am I going to get back out of this? Where's the catalyst? When's the catalyst? To be able to have people recognize what I see, right? If it's going against you. But then on the positive side, I guess not mistaking luck for talent. Because it could be talent that, okay, now everybody gets what I get, but it could have just been a factor shift or other types of things going on. So I think that having a framework, an investment framework, is really important. Um, and I don't think fundamentals are enough. I don't agree that like fundamentals don't mean anything because I think they do over time, but I think that they certainly can mean a lot less in the short term, and therefore knowing technicals. And think of this is such a smooth segue. Technicals like Bakes give us is so important.
Well done, well done.
Velvet, velvety segue.
Yeah,
Yeah. So,
7 in the
Bakes, what are
morning.
you looking at?
Well, I hadn't planned on this, but since you brought it up, I'm and this is why technicals help. This is the IGV software, and I think CRM is probably giving it a bounce today. But I mean, look at this level. One, two, three, four, five, and this is the sixth touch of this level that goes back, 3 years, and this is a logical place for a bounce. But it's just I'm always struck by the market memory. And people say, "Oh, nobody owns it from 3 years ago." Well, yeah, they do. Yeah, they do.
Oh, for sure
So
they do because
yeah,
they have
and
low
I just,
cost basis. And whenever
yeah, and I just,
somebody's like, "Oh, trading in and out of this or whatever," I'm like, "Do you have a taxable account or is this in your Roth?" Right?
yeah,
Because I
right,
know a lot of
right.
people that like don't want to pay taxes and tell me like unless you hate something, and if you can't hedge it, hold it, right? Like if you can't have a reasonable hedge, then you got to hold stuff.
Yes. I'm struck by that, but let me talk about the three things I put in the chat, and then you can go off onto
Yeah. All
whatever
right.
tangents you would like.
Tangents. Oh, every tangent we want today. All right.
Yeah.
Oh, this is a
Uh,
geometry class.
David's telling us
ben
that
Ben.
taxes are patriotic.
Yeah. Ben asked, all of us, both of us, Robert and I, on the Tuesday show, what do you think about Nvidia? And I said, I said, I think it's going to be a nothing burger, and people are going to shrug. And they obliterated numbers and
Yeah,
guidance, especially the gross margin at
it's
seventy five
down.
percent, which you know everybody and his brother practically was saying, "Oh, that's coming down." Well, it isn't, but this isn't as bad as Palantir, but if earnings can't make your stock go up, you've got a problem. And I don't care about things being not that bad. Things are great at Nvidia except for the stock. It ignored the last earnings report. It ignored this earnings report, and it can't go up. CNBC tried hard, to make it look like a positive on the bugs at the bottom of the screen. Nvidia up on earnings beat and raise. It was up 54 basis points,
Yeah, it's down
pre-market,
now,
and
by
now
the way.
it's down. And it's down
But
on it looks like it's going to be about 3x volume. And so, tell me what they're going to say over the next 3 months and the next earnings report that makes this go up. And it's,
but
I say,
Biggs, let me interrupt you. But by my look at the chart, it hasn't violated anything yet. Now maybe that's what you're arguing is it's going to, but it hasn't, hasn't violated
well,
anything.
okay, and that's why I was gonna reference Palantir. No, this is fine. This is a channel. This is a base, 212 to 171. Okay, that's the channel. And the 200-day is at 174. So apparently today is not going to be the day that it violates anything, but it didn't go up. I mean, Jensen Wang tried to resurrect software and chide us all for being so irrational and how we're reacting. The market is the market, and by the way, the market's pretty smart. There's 50 million Bloombergs learning how to play, as ACDC would say. So if you can't go up on that report, what's going to make it go up?
New
And it doesn't mean
capital.
it's that
But a lot
bad.
of people are in this trade, so you got to have people putting more in, having a belief in that. And after getting obliterated in various software things, they don't want to know, right? Yeah.
Yeah, and yeah, I guess it's
Do you
rhetorical,
do you
but what's
really
going to
think
make it
today is
go up?
fundamental
I don't
trading,
hear
or
it.
do you think it's tape painting? That's what I'm asking. In terms
Pardon?
of is today fundamental trading or is it tape painting? That's
I, I
what
just I
That's
just
why I
think
say
it's
it hasn't violated anything yet. And if this is, I don't know. I'll leave it alone.
I'm here to make money. And if you're not making money when you obliterate earnings report and show,
Yeah, it's not good.
75% data center revenue growth, when are you
Yeah.
going to make us money? And I
Yeah, like
hear,
what do people have to believe, right? But and also when you have CRM up on the fact that like I mean, I don't think it was that great, right? But I think people are just happy that it didn't like AI hasn't crushed them yet. But that could come in
well,
the future, right?
Great segue. And Benioff was he was one of the head chiders of, oh, this is so irrational. Well, I don't know. This is, CRM just hitting support, back here from 2019, pre-COVID, frankly violating it. And so okay, yeah, you hit this my system's awfully slow today. Um, so you bounce off this level, okay, but it's one day. And this is why
Right.
I like, using the different time frames, because CNBC will show this as an up, sorry, an up 3% day.
Yeah.
So what? So what?
Yeah.
It's Garfield 2, the sequel. It's a dead cat, you know, and to get it
Oh.
to get it above to get it above. I'm picking on him.
Meow.
Their legal
Yeah.
team is coming after me. Um, so yeah, could have bounced to 227. Could you make maybe,
Yeah.
but you know, earn, I, you're trying to disprove a negative, and you can try, but I don't see anything going on here. And frankly, I'm kind of astonished that the market is holding up as well as it is, because the rotation is, in fact, here's the Qs. The Qs don't look that bad, so they're rotating into other tech in order to keep things levitated. But Nvidia below 174, that's not going to be pretty. It's not happening today, but as we're talking, it's drifting down. You see this?
Yes.
We're trading at the
Yeah.
lows of the day, so everybody is going through their, listening to the conference call, going through the notes, going through their model, and they can't make it go up. And it might just be the buyers are exhausted, and it's now a time for the people that have been there for 10 years to let some go and get underweight.
Right. Or they were just hoping. Some of this just might have been a hope on a positive. I actually would argue, like, so the fact that I see it's down a little bit over $9 right now, and the stock is at like 186 and change, is that you might be down because people bought it for the pop today. So there might be that trade, and it might be a good time to enter. You might get a 1 day pop tomorrow, like, tomorrow on this thing, because people didn't get what they wanted on the earnings report. So I just caution folks a little bit if they're very short term. I've seen that movie before too, right?
Yeah, and I'm not incredibly negative on Nvidia. I just think it's a commentary of where we are psychologically. Palantir
Yeah,
blows numbers out and can't go up
yeah.
and rolls over. Nvidia blows numbers out and people shrug, and we stay in the DMZ between 171 and 212, which is a big DMZ. I understand that, but they're not going to get into North Korea anytime soon. So the
Okay, now you
I
have a
just
good
Let's,
segue to me, Bakes.
Okay,
let me
good,
interject.
good. That's what I
Let me
do.
interject though, because
Okay.
this gets back to what I've been preaching for the last couple of weeks, and that is, if tech is rolling over, the Mag 7 trades poorly, and now finally the XLF, which is the broad financial services index, is showing erosion or distribution. This market has very little upside to, no matter how much sector rotation you go into, because those two groups, tech and financials, are 45% of the market. So that's part of why I'm bearish. But in the meantime, the indices, the averages, aren't going down.
Yeah, and I think it's okay to be bearish, but be more bearish when the price action confirms the bearishness. And I don't see that in a lot of segments yet. You know, we're moving the deck chairs, but so far, we haven't hit the iceberg.
Well, speaking of places that are doing well, let's look at South Korea, EWI, baby. If you want to punch that in. So I think people know, that we play
Good God.
internationally, right? So I think I talked before at length about Japan. You could do it. I mean, we have individual stocks, but we also have ETFs. Like we like EWJ is the whole thing. SCJ is small cap. I'm not going to go into the thesis again of why we also like small cap there. But just look at the EWY, South Korea. That thing has been a monster. Of
Huge.
course, you have to be a bit careful though, right? Because that is, they've had lower valuations than our tech stocks. It's a AI supply chain exposure play, memory dominance, manufacturing depth. Um, you know, more of a pick and shovel type of play. But I'd caution that it's a found play, right? So be a
Yeah,
little bit careful. Go ahead.
I
What's up,
mean,
Charlie? You look confused.
no, I'm complete opposite of you on this.
Okay.
I mean that's being driven by HK Hynix and Samsung.
Yeah,
So
absolutely.
you're playing the AI trade, which is a bubble. I
That's what
just
I just said. But people, the valuations were less than here, so people rode that up. But now it's consensus. So I'm with you in that it's consensus now. So what you can't do, which was my first point, is stick with this stuff forever because it's run up so fast, right? And it's like, okay,
I think
everybody knows now. New trade.
you're going to wake up sometime in the next couple of weeks and it's going to be just like silver. It'll be down 30-40% in a day. I can't buy it. I mean,
Well,
anyway, sorry.
Charlie, we're agreeing. You're violently agreeing with me. You have to find a new trade. So that's why I was going to talk about new trades. Like, take a look
Oh,
at
okay.
EWA, Australia.
I like
No one else is
Australia.
talking about Australia. EWA. So we have Australia. We've had Germany. I think I've talked about Germany before, because everybody hates Germany. But guess what? There's green shoots in Germany. That's EWG. If you're kind of playing the ETFs, right? So if you're a U.S. investor, I'm not saying you have to go out and find your local currency shares and make those trades. Like we do. We also, for some of our individual clients or family office clients, own the ETFs. Because Spain was the big story last year, right? I think that's EWP. You can take a look at that. Um, and also, but take a look at Germany. It didn't do as well, but that's on the up and coming. We like Sweden. We like Australia. Um, you know, you could argue Denmark if it turns. So yeah, take a look at Australia, doing better, doing better. So you got to find the less loved than before. That's what you got to do. Got to find the less loved from before, and obviously you hope you know the fundamentals around it. Take a look at who the big stocks are in some of these places. But when you go from people hating it to not hating it as much, that's where I think the money's being really made here, right? And that's what we try to do is be a bit non-consensus. And if you're playing versus a benchmark though, you can't afford to not be in South Korea in that ramp because would have had to find other EM markets. Maybe you were in Brazil, maybe you're in other places to own. If you so the timing really matters on this stuff. And that's why the technicals matter on it in addition to the fundamentals. But that's where my team brings in those technicals, is that we have our favorite fundamental plays, but taking a look at the technicals to be like, well, how long can I stay in it? Who else is in it? How is it trading? You know, you got to put all of those things together to then be able to make the trade right, especially if you're playing against a benchmark, which owns it. And so I think that those sometimes can be harder strategies to run because they can own a lot of junk that's rallying or stuff that like keeps on a rally. But that gets to be, are you good at what you do, and do you have a process, and is it working? That kind of stuff. But we,
Nadine,
take a look at non-consensus stuff like hated stuff in Europe. Go ahead, Bakes.
am I hearing you right that you're selling slash fading EWJ South Korea and buying Australia, or have I got that
No, you
wrong?
took a look at Japan. We actually think that it's under-owned. So it's less about the price. Like, if you just looked at the stock price, right, you'd be like, oh, EWJ has been fantastic, right? But it's under-owned. And so you also have to look at where are places owned versus under-owned, and that's
They all
a
look similar,
lesson
don't
point.
they? They they
What?
they look a lot alike.
Which one? You mean South Korea and Japan, or what are you talking about?
Yeah, well,
No, South Korea
South,
was more like
yeah, South Korea looks like a rocket ship.
Yes.
This is a, you know, and the problem with sorry, what's the symbol for South Korea again? I didn't write it down.
South Korea is where is
WY.
it? EWY.
Thank you. You know, there's a lot of Y's in South Korea, so I can understand why they chose that. You know, but here, like this to
So I
me
don't
is
think
the
they look
breakout
alike.
point.
Yeah.
Maybe imperfect, but here's the breakout point in September. I mean, that's a base, and that's taking out a base pretty significantly. That looks great. This, when you don't, like, again, my discipline, not anybody else's, 68 to 139, 136, double your money, take off the half, and then play with the house money. I think that's fun. But again, your next support really is down here at the C note, 100,
Yeah.
You know,
and that's a long ways away.
I'm a big believer in technicals, Nadine. Going back to your comments, and Bakes has done a phenomenal job of helping us stay in trades and make money. But there comes a time in market cycles where the technicals get you into trouble. And what are the two sayings? The trend is your friend until it starts to bend, or the other one is, every new high is bullish until the last one. Um, and I think that's where we are right now in this market cycle. Is the technicals are going to get you into trouble because they are trend following and momentum. And there's so much leverage and this system right now that when this thing breaks, it's going to break very quickly, and you're going to get those 30% down drafts very quickly, and you're not going to have a chance to say, "Oh, I broke a trend line, I got to get out." So I'm paying less and less attention to technicals just right now. I believe in technicals. I use them a lot, but right now I'm not trusting them. Anyway, sorry.
Let me give you one example to I think address that, or at least, and I'm not arguing with you. I mean, everybody has to do it their own way. But I mean, here's Palantir, where frankly there was nothing bearish going on from 23 for the last 3 years. Okay, so I'm bullish, 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 bullish from, I don't know, 8 to 200, and then the subtlety. That's not subtle. Here is where you get into problems. Now, yes, you don't catch the top. You just don't. At 207.52, I didn't have sell
Hard. Yeah.
signals.
Yeah.
But this is where the trouble starts. You close the 200 day, the 50-day comes down through the 200, and then you watch the volume, and the volume actually isn't that egregious. But that's the change in trend. And I'm not going to kid anybody that you can pick off this. And I've just given up. There's no way to pick that top. That's why I like to sell doubles, because then I'm playing with the house money from, in this example, which I did not own, full disclosure. But, let's say you buy it at 10, you sell half of it at 20, and then you ride the rest at 207, and then you sell your first third here at 150 some odd, and then your second third at 133. That to me, you're getting most of the meat of the move.
Yeah. Actually, I want to put together both of your expertise. Can you put in BAC? It's a bank stock bouncing. Let us know. What do
Bank
you
of
think about
America?
this bounce? What's going on? Yeah.
Charlie, you've forgotten about this more than I know, and I'll come in afterwards.
Yeah. All right. Well, listen, the XLF in my mind is rolling over, and I think we had an important break in the last 2 weeks, and all we're doing is trying to suck in the dip buyers right now. So I'm very bearish on the banks going into the spring, and trying. I have traded them because I know there's still the dip buyer mentality out there, and the fundamentals right now short term look very positive. But there's so much anticipated in these positively anticipated in these fundamentals, and yet I see some problems on the horizon. So uh, I'm staying short them even in
Okay.
these bounces.
Here's a subtlety. JP Morgan, and this is literally pennies I'm talking about. So get in front of this steamroller at your own peril. But J.P. Morgan, and why anybody thinks they're going to get positive news out of a Jamie Dimon speech is beyond me. But they had their investor day. They didn't like it. They closed it below the 200-day, and now they're bouncing it on fairly feeble volume. And so that's J.P. Morgan. BAC did not violate the 200-day, but again by pennies. So we're picking nits to an extent, but it's the same thing. Low volume bounce, nothing great. And I talked on the Tuesday show, Charlie, about SEF, which shorts the XLF imperfectly. And the thing with this is the biggest name is Berkshire. So that's a bearish chart. This is the Spider XLF. I agree with you. And frankly, it's more bearish than the other two. And I've been, concerned about shorting Berkshire before because people genuflect to Warren Buffett. And I think that genuflection is coming to an end. This looks like it's getting a little bit weaker, although not terribly so. But I'm with you now on shorting financials. I want to see some follow through in SDF, and I want to see this spending more time below the 200-day moving average, Berkshire Hathaway. But it's 15 plus or so of the index. I mean, it's a big number.
It is.
Can you bring me to Germany? Show me the EWG on your take.
I'm getting there. Thank you.
Everybody hates Germany.
No, they don't. I mean, that's a pretty good looking chart.
Yeah, they don't now. But
Huh?
I guarantee you, people are not super long Germany. I guarantee you.
No, I'm curious about that because there was
Compare it with Spain EWP.
EWT.
EP is in Paul.
Because I thought that this rallied in the Rheinmetall. Europe has to defend itself.
But then a lot of defense sold off a bit.
Rheinmetall's rolling over.
So, but so look at Spain. I mean, that's been more of a monster than Germany.
I've been wanting to say this. I've never been to Spain, but I kind of like the music. Three Dog Night for all my youngsters out there. No, this is the kind of chart that I like. Staircase charts, and this looks more akin to that than the South Korea, which is a rocket ship.
Right.
This is staircase, and what I like about that is that when they correct to the bottom of the prior staircase. When they violate that staircase, to your point, Charlie, is when I get concerned. I don't get concerned if they just pull back, nice and pretty like this into the prior staircase. Especially look at the volume down here. That's pretty positive volume. So that trend is up until further notice, in my opinion.
And then back to the Germany. What are you thinking about that one?
I'm surprised it looks as good as it does, given the weight of the defense companies in the index, which I haven't looked at recently.
I mean, they have auto, they have banks, like insurance.
Yeah, this is awesome. This is the pre financial crisis, and look at that. Touched it here, touched it there, and broke above it. And so now, pulling back to this 36 level would make some sense. But that's a decent breakout. Yeah.
And they had to get past like SAP bombed, right? That's a big one. Siemens is in there. Allianz, which actually didn't have such a great report today. But Siemens Energy, nice. DT, but you're right. Rheinmetall's, maybe like 4% of the index. But Deutsche Bank, Deutsche Post, there's a lot of names in there. When you're looking at it, but Germany itself, just for those who are interested, some of the biggest sectors, really industries, are insurance is about just shy of 14%.
Yep.
All kind of manufacturing, software, a lot of that's the SAP, right? But they've got a little bit of machinery, telecom, auto. I mean, aerospace defense only 5.8%. So
notice what you're not saying. You're not saying technology.
Right. And so like when you're thinking about what could continue to go up, if things improve, right? If fundamentals improve from hated levels, I think that those are easier bets in this kind of market. Just when we're talking to people about where could opportunities be, right? Where could they be?
Yep.
We like that kind of stuff. So
You
I
know,
know we're
Hey,
getting
just
long
well,
here. Go
does
ahead.
Germany
Final
qualify as
notes.
a halo trade? You know, that's the new acronym
makes
that everyone.
sense. That makes sense.
Yeah, I mean a little bit. I mean SAP would be a not that, right? And that's one of the large things there. But it does make sense from European industrial type approach, right? So it'd be a bit of a halo. But you have to believe that their economy is doing better. Like we own some real estate in Germany. We own some like some of the industrial and energy utility type names in there. That's what we like about it. A little bit in financials too,
Hey,
but just
Nadine,
trying to own
just
out of it. Yeah.
for new,
Yeah.
listeners, viewers, yeah, who is we if they want
Yeah.
to, look you up?
Oh, we is Solstein Capital. So we
Okay, I'm just,
do
I want
global
to,
investing, and half of what we do is ex-US for big institutions, and half of it
okay,
is global cross-asset for call it families. It can be institutions or individuals, and so we have to know about the macro trends, but also have to care about not just making money, but comparing it to how the market's making money. And so
right,
there's two things we want to do is we want to, well, I guess maybe three. One, we do want to make money, but two, we want to be able to do better than a benchmark because otherwise someone could do it. And we want to get our returns in a different way than the benchmark. So last year, we just had our a big meeting with one of our large pension clients, and we got there in a different way. Like we had gold stocks, and we told them in January what we were going to do the whole year. We had European defense, we had gold, we had EM, we had a lot of things that ended up doing well last year. You can't always get all those trades kind of right at the beginning of a year, but that's what we were trying to do is not be in the trade that everybody else was. So,
yeah.
because otherwise, like, why would they give you money if you're just, doubling the bet of an index? They might as well just put leverage on stuff and do it. You really need to, I think a little bit differently. That's all.
I like
So
it.
what is the trade this calendar year? I'll give you a year that no one else is in right
Well,
now.
we
Is it
don't
Germany?
give that out. I actually, so my clients know, but I don't give that out in the air. So I'm really careful about
Okay.
that because sometimes we are building positions and like we are right now. We bought some stuff yesterday. But I'm giving you a hint, giving you little hints today, right? Giving you some hints today
Australia,
of where we're
Germany,
at.
Spain.
Giving you
We-
some hints of
we'll
where
discuss it in
where
the
we've been at.
bar, Charlie. We'll discuss it in the bar with Nadine
Yeah,
later.
right. All right. Listen, thank you so much, everybody. It's Wall Street Beats, powered by Passes with Charlie Peabody, Kevin Bakesbaker, Nadine Turman. Thank you so much. Have a great day.
Thanks, guys.
Thank you,
Bye.
folks. Thanks, Jen.